बात करते हैं द वन एंड ओनली समीर अरोरा। हेलो जी, गुड मॉर्निंग।
Hello, how are you?
लॉन्ग टाइम, लॉन्ग टाइम।
Yes. Because last time you were not there when I came on your channel.
Yes, that's a long time for me.
Yes. Just to clarify.
What's keeping you busy these days?
What is keeping me busy is the overall excitement of the market and the fact that now we have these more interest in the offshore fund, the mutual fund. So there's a lot of things to do. Basically, I've always wanted to lead a busy life. So, when I joined my first job, my only criteria was that I should not have to look at the time and say, yaar, 5 kab bajenge ya 6 kab bajenge. So that is what I've done all my life. So it's good.
I just want to share with our viewers that Samir has this real art of innovating into himself. In COVID, he was doing magic tricks. Haven't seen a magic trick from you in a while.
No time for that, but I will. I see all the things which come on Instagram or something on Magic and all, the tricks that people are doing and basically telling the trick. Then I have to practice some of these myself. Then I'll show you.
We have Helios Flexi Cap fund holdings on a screen, and I just want to share with our viewers is that not even a year, and the return I think is in the top quartile. तो जी
Please don't
कमाल.
say year. It's 5 months.
Yeah, I'm saying it's not even a year, and it's the top quartile.
24%.
It's a top quartile. It's not even a year. So I mean, it's like really, it's been a great start. So for Samir Arora and the investors of Helios, they need to understand from you where things are headed. In the near term, do you think we need to step back and look at the global setup, which frankly is not very pleasant on the macro side and also on the geopolitical side?
So I think macro to fir bhi is okay. Because, okay, you can always live on hope that after 6 months there'll be interest rate cut and all that doesn't really matter beyond a point. Because the reason why the US is not having interest rate issue is if the market is strong, if the employment is strong, then that also is a good enough label to say that these are good macro. So the question is about the geopolitics and the language that is used by both Israel and Iran. And I'm happy that the world that is led by US and others are trying to put pressure to say, cool off, guys, particularly to Israel. But that is an angle. But those things, it is very, very difficult to predict. And what will you do today? Because even if we say there is some chance, do we make it 10% cash, say in a long only fund, or reduce our net by 5-10%? So some of these you hope that things work out. And if not, you react fast. Maybe you will miss the first 4% fall, but then you have to interpret that day. But I agree that the geopolitics and the language and the tone is not good.
You've been maintaining this view that forget elections, start talking about budget.
Correct. That I.
So how do you see markets now moving in the run up to the budget? Do you see volatility or you see markets will remain firm?
No, they may be volatile, but I think that the budget will be good. Or that at least till that day, we have to be excited about it, considering the language and the tone of the message from the Prime Minister himself about it being a transformational budget, about talking about the first 100 days, talking about the steps that various this thing have to take. Plus, separately, because the real budget was not there, except that in that budget they had guided for a lower fiscal deficit. That also is good, but to convert the big picture plan into an operational plan means, according to me, that you will have to do divestments of some PSUs, sort of lock, stock, and barrel. And there is one negative niggling thing, which is what if they try and change the capital gain tax definition and structure. But if they do that, then everything else would be washed away. So we say, please don't do that. But if they do that, it will be very negative and it will neutralize everything else. So if they don't do that, then I think the budget will be very good because it will be related to divestments. I think it will be related to unlocking of real estate, of PSUs. I'm just doing big picture that you can't make it transformational and simultaneously cut the deficit. Because if you say, I'll cut the deficit by reducing capex or reducing subsidies, then it's not transformational. Transformational means actually unleash some new investment or into new themes or new sectors by doing selling of some of your assets and then investing it somewhere else, and at the same time bring in Tesla type guys by whatever changes have to be made in some in taxes or import duties or whatever. So far you have to go excited. It is the easier course to take. And as I said, if the world is doing well, why should we? Well, there's nothing wrong separately in India for us to feel negative in any way. This idea that Indian valuations are very high and all is all nonsensical stuff by all these guys who come to India for 4 days. Like yesterday, there was a story. Basically, we know it is expensive in consumer, so don't buy it, underweight it. Rest of it is not so expensive in any case, relative to our own history.
Every 3-4 years, there are big themes which are born. And if you latch on to those themes and say, okay, I don't care about what is happening in the world, for me, this is a big theme and I'm very happy with it. I'm going to draw this perspective for the benefit of our viewers that why am I asking this question to Samir? Because the man on your screen, Samir Arora, he bought into private banks, he bought into retail, he bought into IT. So these are these mega trends which we talk about.
Into
Bharti, yes, a lot of these
Bajaj Finance.
A lot of these mega trends.
Varun Beverage. But the thing is, it's not easy, but they come up. You don't have to think of them as things. For example, where in my whatever number of years you've been taking my interview, would I have ever been able to say till we did it that we will be buying HPCL or something at some 235 rupees price? These things come with time. You just are there. Basically, 80% of the fund doesn't change. That remains in whatever thing. But for example, out of the blue, or not out of the blue, but we should say with deep research and consideration, we decided to make our IT zero. But you could not have thought, I could not have thought of that 6-9 months before that it will become zero weight. So don't ask me like that, because there's no big picture theme that I will go after. But you make 4 or 5 stocks related to whatever is happening, and the rest of the portfolio remains longer term without thinking of a theme, and you are adjusted to the new environment. So we adjusted to the new environment for the last 2 years by buying a few more PSU stroke value stocks, because we thought that there had been a massive underperformance of value versus growth for the previous many years. And when it started, and then the PSU, there was logic of how the Prime Minister is forcing or putting pressure on PSU managements to to go for a bigger market. That why are you only, just because you're called a railway PSU, why are you only doing railway business? Go and compete with the L&Ts of the world or whatever. So all these things, you go along as it comes. Don't make it bigger than that. There's no big theme that I know about.
Big theme that you are specifically watching out for, Samir, but it's no secret your optimism on HDFC Bank, ICICI Bank, SBI, etc. But what are you doing incrementally? Are you adding weights in that basket, and also are you looking at expanding your financials exposure? Geo Financial Services has been doing quite well. Any other name that you are watching out for?
I don't think we had bought Motilal Oswal it's there in the mutual fund also, so must have been bought in that around that time, because we all have it, all our funds have it. But I don't think we bought anything else new. But the next mutual fund that is being considered in India that we might do will actually be related to financial sector, because we think that this sector has, in a big picture sense, done very well all our life, which means more or less all the life of the market since 90s. And it has not done well, at least in aggregate, for the last 2-3 years, while the numbers have been good. And it is where there's a lot of breadth of choices, from mutual funds to brokerage to wealth management companies to banks to private banks to state-owned banks to whatever, credit card company. It covers a large part of the market, and it has somewhat, not a lot, but somewhat out of favor. And so we think that is a worthy thing to do as a fund. So that means we are very bullish on it as a complete theme. But I would suggest from your side, don't ask me on HDFC mutual fund, HDFC Bank. People are sick of my talking about it.
No We are absolutely not, Samir. We can
It's
go
our
on
number
hearing
one
your view
holding.
on
We
this.
like it, but just move on and ask more interesting things.
Okay, so let's move on to more interesting things. And one thing which has been garnering a lot of headlines of late is telecom. So you have exposure to Bharti Airtel, but what's the view on Vodafone? Would you be perhaps a subscriber to the FPO?
No, because the thing is, if you see the assumptions on how and why this should do well, there is an inbuilt thing again and again that you need a 20-30% price hike to be profitable or to do well. And so if you have a 30% price hike, we'll also do all right with our Bharti. But you know India and you know the stock market and you know reality. And so we have to deal with all those things. Of course, this may do better than that for a few months if that happens. So we won't buy it because it's okay.
You bought into urban consumption, but now is there a fear of a base effect which could kick in? There's a time of base effect for urban consumption. I mean, the theme was avoid rural, buy urban consumption.
So
or urban
actually,
luxury.
yeah. So if we look at the stocks that we own, we think they are okay. For example, we still continue to own Varun, which I think just because of the summer will have, I don't know, maybe 30, 40, 50% growth in terms of at least the volumes for now. Or if we look at Zomato, it is not so much because of just the food consumption. It is basically taking market share from the other companies and all. Other companies is not from Swiggy. I mean, you're just getting from the same business. People are just sitting at home, but its main story has become Blinkit. The other big consumer companies we have are not very big separately, but this Titan types and all that are okay. So we don't have those typical old consumer companies, the staple type companies, other than a little bit of ITC. So we are not over. Actually, we will be happier if we don't have auto, where you can clearly see a slowdown. In fact, today is an article in your related newspaper only about the big discounts that are being offered. So we are not that way overweight in the regular India-related consumption going up. There's in all of these there is some market share angle and some premium angle. For example, Landmark Motors, because the Mercedes is selling, but the other cars are not. That kind of stuff.
Samir, good to have you on board as always, candid and sharing with us your view on individual sectors as well as the markets as a whole. That's a word coming in from Samir Arora.
If you like this video, then like, share and subscribe to ET Now.